The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hi, everyone. How's it going? Welcome to another edition of Breakout Investing on TFNN. I'm your host, Ken Shreve. If you want to call in, the number to use is 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. And I will be hosting the first hour of the Tom O'Brien Show tomorrow on Friday. I'll be on from 4 to 5 p.m. Eastern, so be sure to tune in then as well. In terms of my show, you can download the podcast anytime on iTunes if you can't listen live. Don't forget, if you want to check out the charts that I'm looking at on my program, you can look at the charts along with me on at tfnn.com and look at the charts on the TV there on the home page, and that's on Channel 1. And after the show is over, the show is archived on Channel 13 in Tiger TV. And, of course, another way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi, and you can get the stream that way. If you'd like to try a trial to my Ultimate Growth Stocks newsletter, see what's in my model portfolio, you can also do that on the homepage of tfnn.com. Just go right on the home page. You'll see me in the carousel there, or you can click on the newsletters tab at the top of the page and click on newsletters and then investment newsletters after that, and you can get more information about Ultimate Growth Stocks. I basically use a combination of fundamental and technical analysis when evaluating a stock. I use a top-down approach to the market, which means that price and volume in the major averages means a lot to me. It really helps me guide my decision as to when I'm going to be in the market and when I'm going to be out of the market. Certainly the market's performance off the lows since October 4th has been fairly impressive, and we have another pretty decent day taking shape on Wall Street today. It looked like we were going to be down. There hasn't been much volume at all in the market today. Big surprise there, I know. But it looks like we were ready to kind of fade and come in, but we're working our way higher as we head into the close here. Let's take a quick look and see what's going on. The Dow is down 8.5 points. Call it 0.1% to 11,510. The NASDAQ up 17 points now, almost 0.7% to 2621, and the S&P 500 just down a fraction now to 1206. Taking a look at a chart of the S&P 500, really two resistance levels that we're dealing with in the S&P 500, 1220, that's going to be this high set right here, and also 1230 right in this level here. So, you really can't rule out an upside breakout for the S&P 500. I received a lot of emails late yesterday about my friends over at Investors Business Daily actually changing their market outlook in the big picture column, their flagship column on page A1. They changed their market outlook to market in confirmed uptrend. That means that the market tide or the market uptrend was confirmed yesterday by a 1.4% gain in the New York Stock Exchange Composite yesterday. You had volume pickup from Wednesday's or from, I should say, the prior session's level. So IBD said that qualified as a follow-through day. Personally, the art of identifying a follow-through day is, it's an art. It is not a science. When How to Make Money in Stocks first came out, written by Bill O'Neill over at IBD, he would initially look for a 1% gain in at least one of the major averages. Then he moved it up to 1.7% and then 2%, and lately, probably over the past couple of years, they've been a little more lenient in terms of the percentage gain that they're looking for. But, my opinion yesterday really did not have the feel of a follow-through day. The New York Stock Exchange Composite was clearly the best performing index yesterday, but we did see some selling late in the session. And the thing about follow-through days is that they really are supposed to convey, unequivocal strength. They should be powerful. They should be with conviction. And I just didn't really have that feel during Wednesday's session. But that being said, IBD did call it a follow-through day for the NYSE Composite with a 1.4% rise in higher volume. So according to them, the market tide is up, and I would think that with that, there is at least a chance we could see an upside breakout in the S&P 500 over this 1220 level, maybe eventually over this 1230 level. Of course, a lot of it is going to depend on what earnings are going to look like. Next week is a very, very busy week of earnings. Alcoa kicked things off this week with a lackluster report at best, but next week a lot of financials reporting. Really not expecting a whole lot of good news in that sector, but I know Apple reports next week and several other growth names. So hopefully the news will be good and it will provide a lift for the market. Let's go ahead and take a look at the NASDAQ Composite. See, the index is up about 15 points now, 0.6% to 2620. Resistance level for the NASDAQ right now is 2643, and it's really only about 23 points from that level. So, it's really simple. I mean, if we hear something good from Google after the close today, I mean, it's not out of the question that we could see a tech rally. I've been saying for several weeks now it would be nice to see volume come into this market. It'd be nice to see volume come into the NASDAQ. Volume coming into the New York Stock Exchange, seeing a lot of growth stocks out there that have been moving higher in light volume. That has causing a lot of people to say, well, does volume really matter as much as it used to? And, my take on that is yes. Supply and demand is supply and demand. It's the same as it was in the early 1900s as it is now. Yes, there's more hedge funds in the market, and there's more volatility, and there's high frequency trading and all that, but volume has always mattered, and it always will. And one of the key volume tenets is when you see heavy volume declines on the way down and low volume rallies on the way up, it's generally not a good sign. So I will maintain that I think this market rally can continue, but it is going to need new money coming in from the sidelines. We're going to need to see more signs of institutional buying, and if we continue to wedge higher in light volume, and we do see breakouts in the Composite and the S&P 500, they're able to climb above these resistance levels, and they do it in light volume, I think it's just going to set up for a downdraft at some point, most likely in heavy volume. Yesterday on the New York Stock Exchange, we had volume of 1.06 billion shares. I mentioned there's not much volume in the market. Again, today, at last check, NYSE volume was on pace to be about 10% lower than Wednesday's levels. Yesterday on the NASDAQ, it was below average volume, 1.94 billion shares. NASDAQ volume today also tracking about 10% lower than Wednesday. Taking a look at some headlines today. Rajaratnam, the founder of the Galleon Group family of hedge funds, he was sentenced today, 11 years in prison for his role in an insider trading case, and his lawyers had asked for no more than 8 years. Prosecutors were looking for a sentence of 20-plus years. So Rajaratnam sentenced today to 11 years in prison for his role in an insider trading case. Let's take a look at shares of Akamai Technologies, AKAM. This is a company where takeover rumors have swirled for quite some time. You can see it's really a beaten-up stock here. Has been in a downtrend for quite some time, but shares are outperforming nicely today, up 5.3% to 2460. I think it was the Business Insider publication yesterday website that said that Google might be interested in buying this company. I think it's just a rumor. Akamai provides technology and services that speed up delivery of content and applications over the Internet. It's certainly not the first time that Akamai has been mentioned as a takeover candidate. But The stock has been moving higher in pretty heavy volume for a couple of weeks now, but that is just a rumor. And speaking of Google, they will be reporting earnings after the close. What they say could result in a tech rally tomorrow or not. So it's going to be a high-profile earnings report after the close. Earnings expected to be up 14% from a year ago to $8.74 a share. Let me pull up a chart of Google here. I really don't look at Google as a stock that has the potential to lead at this point. It does, to me, look like a technically broken stock. However, if the news is good tomorrow, we could see a breakout over this price level right here. What is that? About $550 a share. Let me go ahead and see where we're at with Google here. It does have a kind of approaching a resistance level at 558, and shares are recently trading around 555, so it's not far from a potential breakout, but you can see it's been consolidating gains since, I'll call it, late July in this area here. Came down. It's still deep inside a base, but a breakout over 558 isn't out of the question. So we'll see what Google has to say. Some are worried that Google is losing ad dollars to Facebook. Also going to get an update on its Motorola mobility acquisition. That's going to close in a couple of months, I believe, and there's some. It's probably going to have a negative impact on margins. High-profile analyst over at Piper Jaffray, Gene Munster, recently said he expects operating margins for 2012 at Google to fall from 46% to the low 30% range. Earnings news today, we had J.P. Morgan Chase, that's ticker symbol JPM, on the New York Stock Exchange. Stock has been under a lot of pressure all day, down about 4.7% at this point to 31.65. It had been in rally mode ahead of its earnings, and the numbers, frankly, weren't too bad. I mean, they did beat pretty handily on the bottom line and top line. Earnings up 1% from a year ago to $1.02 a share. Sales up 1% to $27.1 billion. Again, a good beat in terms of earnings and sales growth, but it's not helping the stock much. We have earnings next week from a variety of financial companies. So I think it's, we're going to have a pretty good idea of which way this market wants to go, probably starting tomorrow, Friday, and into next week when earnings season really kicks into gear. But several financials set to report next week include Bank of America, Goldman Sachs, Morgan Stanley, and Wells Fargo. Economic today, not pretty quiet day. Weekly jobless claims fell 1,000 to 404,000. Tomorrow we're going to get a look at retail sales for September. Really liking the action in a lot of retailers here, I have to say. Retail sales for September are expected to rise 0.6% after a flat reading in August. Excluding auto, sales are expected to rise 0.3%. Again, last week, good same-store sales numbers from many of the nation's retailers. Also tomorrow, we're going to get the latest reading on consumer confidence from the University of Michigan. The index is expected to rise to 60, up slightly from a prior reading of 59.4. We had a slight increase in consumer confidence from the Investors Business Daily Tip Economic Optimism Index earlier this week. Stick with us, folks. We will be right back.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Have you heard of an organization called iFixit? Well, if not, they got their hands on the latest iPhone 4S a little bit early, and we now know who some of the parts suppliers, who some of the component suppliers for the phone are. Qualcomm is on that list, Triquint Semiconductor, TQNT, Skyworks Solutions, SWKS, and also one of my favorite fabless chip companies, Avago Technologies. So let's take a look at AVGO. We've mentioned this name on the show in the past. Shares of Avago off its highs today. Yeah, this is the the type of price action that makes me a little wary of this market. Again, you can't rule out anything in this market. The volatility is out there in spades. That said, it's tough to go long with conviction, and it's also tough to go short with conviction as well. In an environment like that, I tend to keep my powder dry with in terms of my model, Ultimate Growth Stocks model portfolio. But that's just the way it is. I mean, shares of Avago, this news came out. Some of their power amplifiers are in the iPhone 4S. Excellent company here. It was spun off from Agilent Technologies in 2009. Still think this company is well positioned for growth, but after hitting an intraday high of $34.93, shares were recently trading around $33.71, up 6 cents on the day, trading near its session low. But I have a weekly chart of Avago here. Let's go ahead and take a look. Avago Technologies. We're going to look at the weekly here and see that this is a good example of a base. It's not a perfect base, but a stock where you can't rule out an upside breakout here. The start of the base is right over in this area here. It came down in price. Now it's forming a little handle area, looking for this stock to clear $37.99 in very heavy volume. That would be your breakout, but it still has a ways to go to get there. So it is a stock that is looking interesting because of good fundamentals, a reasonably strong technical picture. But again, typically when a handle area forms like this is a cup with handle pattern. But you can see these down weeks here. Volume was pretty heavy as it was pulling back. Typically you like to see light volume in the handle, so it's not a perfect base, and it seems like most bases out there that are forming you can find things wrong with, but can't rule out a breakout in Avago over $37.99. Still about 3 to 4 points away from that swing point, but one to watch if the NASDAQ really gets going here. So that's a look at Avago Technologies. Also, a lot of BlackBerry users out there, I'm sure. Research in Motion. Let's take a look at stock shares are down 1% today to 23.62. Technically, not a healthy stock here. A lot of value guys trying to get in down low here, but still very risky as the stock is trading below support levels. Research in Motion said today that it had fully restored its BlackBerry service after several days of worldwide outages. The company blamed the outage on a failure at a European data center. Stock is down about 60% since the start of the year. So Research in Motion can't seem to catch a break. Taking a look at crude oil today. Haven't touched on crude oil, down 1.6% to $84.23 a barrel. Gold, meanwhile, down 0.8% to $1,668.50 an ounce. The yield on the 30-year bond recently around 3.12%. Yields had been heading higher for 4 or 5 days in a row, but investors were buying bonds today, sending yields lower. So the yield on the 30-year recently around 3.12. Yield on the 10-year note also lower today to around 2.15, 2.16%. All right, let's take a look at some movers today, some stocks on my radar. We'll take a look at MasterCard. At last check, this stock was having a pretty decent day. It's a stock that has been basing for a short amount of time, still has more work to do here. This is what I'm finding in general. Some stocks that have moved higher off their lows, but they're still in the process of building bases here. The good thing is that MasterCard is above its 50-day moving average again, but you can see the distribution, these heavy volume declines on the way down, and volume has just been so quiet on the way back up. It's not clear to me that institutions are coming back into this stock, nor is it clear to me that institutions are coming back into the major averages in general, and that's kind of just one thing I'm watching. But shares of MasterCard up 2.7% today, outperforming nicely to 336.81. When we come back, we'll take a look at Visa, which is also setting up, and a few other interesting charts out there. You're listening to Breakout Investing on TFNN. My name's Ken Shreve. We'll be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Want to go to a couple of calls that we have on the line here. First up is going to be Dominic from Arlington, Texas. I think the Rangers are playing today, if not mistaken. Dominic, thanks for calling. How are you today?
Yeah, good afternoon, Ken. I was calling to ask you, yesterday the NASDAQ had heavier volume than the day prior, and I wanted to know, and same thing with the S&P, but the NASDAQ closed towards the bottom of the range, and the S&P closed slightly in the middle or below on heavier volume than the day before. I want to know if they'd be considered stalling or a churning action.
Yeah, I would totally agree with that. I mean, the NASDAQ volume yesterday picked up quite a bit from Tuesday's levels. It was still below average. I mean, average volume on the NASDAQ these days is right around 2.2, call it 2.3 billion shares. So, yeah, when people emailed me yesterday about this follow-through day by the NYSE Composite, I was really more concerned about the price action that I saw in the NASDAQ and the S&P 500, two indices that I probably pay a little more closer attention to. So I really wasn't happy with the way that the NASDAQ traded yesterday, finishing near its low for the day. It came right up to that close to that 26.43 level and turn tail, and I would agree with you, Dominic.
Oh, just to follow up, because it gapped up, you do not take that into consideration, the points of the gap up with respect to it churning per se? Because if you count the percentage, the points on the gap up, it would actually make it an even more positive day, I guess, for the NASDAQ.
Yeah, I don't think so. I would not pay attention to the point differential in that gap up. I mean, the bottom line is that there was good demand at the open, which caused a gap up for the Nasdaq. But in the end, even though there was heavier volume in the Nasdaq yesterday, the fact that it closed near its session low, and then you also had just stocks that were trying to move yesterday, not only in the Nasdaq but on the New York Stock Exchange as well. I mean, Decker's Outdoors, a name that I follow. It kind of trades wildly, and it can move 7-8 points on an intraday range in one day. But it tried to make a move. Volume was pretty heavy there, and it reversed and closed near its low. Apple was strong, closed near its low. So all in all, I mean, I think the negatives outweighed the positives in the broad market yesterday. But again, out of all the major averages, I think the NYSE Composite with its 1.4% gain did act the healthiest out of all of them. So at this point, we're in the same kind of situation. I would not be, if we hear good news from Google, from tech companies next week, you can't rule out more upside for the Nasdaq. Of course, I'd like to see more volume. On the other hand, if the news is bad, these recent heavy volume declines in the Nasdaq and low volume gains, it could set us up for another leg lower. It's just a tough call right now.
Very well. Thank you so much, Ken. You have a wonderful
All right, Dominic.
day.
All right, appreciate it. Thanks so much. All right, that was Dominic. And next up, I think we have Mike in Lakewood wants to talk about Apple. How are you today, Mike?
Oh, pretty good. And you?
Not too bad, thanks.
As you've been saying, and as I've noticed, Apple's been struggling right about where it's at now. What would turn you more positive? And if, let's say, they surprised and had a 20 or 30 point move upward, what would that do to the S&P?
Well, Apple reports. Apple reports earnings on Tuesday next week, and what concerns me about Apple, again, it's such a hard company to bet against, Mike, with the top line, bottom line growth that they've shown in recent quarters. They had that, the great pre-orders for the iPhone 4S, about 1 million in 24 hours. We're going to see great top line growth when the company reports, and I'll tell you what, Mike, I'm going to keep you on the line, and I'm going to get to you after break if you want to hold on, okay?
No problem. Go ahead. I understand.
All right. Okay, thanks. Folks, so we're going to come back to Mike after the break. Stick with us. We're going to talk more about Apple. You're listening to Breakout Investing on TFNN. We'll be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. Hi, folks. My name is Steve Rhodes, partner at Tiger Metal Exchange. When Tom O'Brien and I started Tiger Metal Exchange, it was with one mission in mind, to help you avoid getting ripped off when converting your jewelry to cash. If you're looking to convert your jewelry to cash, then log on to TigerMetalExchange.com. Take 30 seconds and request your free kit today. Get your free scale, get your free eye loop, and get the cash you deserve. We pay out 80% of the market price for gold. Our payouts are the highest in the industry. Our payouts are more than double our largest competitors, and we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. You can call us toll-free at 866-618-8888 or log in to TigerMetalExchange.com. The Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Thanks to Mike in Lakewood for holding on over the break. We're talking Apple ahead of its earnings report next week on Tuesday. And again, the earnings at Apple expected to be up 56% year over year to $7.25 a share. Sales up 44% year over year to $29.4 billion. So the incredible growth continues for a stock that at last check was selling at 16 times trailing earnings, 13 times forward earnings. Really a low multiple, which is a bit perplexing. But Mike, there are things I like about Apple, and there are things that I don't like. And what I don't like about Apple, in terms of its technical picture, it recently came down to its 200-day moving average, and has started working its way higher. Has rallied with the market since October 4th. Between September 22nd, you look on a daily chart between September 22nd and October 6th, and I'm in, you can watch right in Tiger TV here, there were plenty of instances of, heavy volume declines where it looked like there were some institutions probably getting out of the stock, locking in profits, what have you. It has rallied back. There's been really no volume at all. 4-day winning streak going on right now, volume average or below average during this rally. So I suspect we're going to hear pretty good numbers from the company on Tuesday, but I'm just overall I'm just wary of the stock up here. I suppose if it tries to break out in heavy volume over that 420 price level, there are going to be some investors that will probably buy it, thinking that a move to 500 is not out of the question. But I kind of have mixed feelings on the stock right now.
Okay, that's what I very appreciate your opinion and your analysis. Do you have any kind of quick back-of-the-envelope calculation that if it does go up 20 points, what does that do to the S&P? Or
I don't off the top of my head.
I just thought I'd ask because I don't have one either. But
yeah, I'm sorry to say I don't. But
thanks very much. I appreciate your time.
Okay, appreciate the call, Mike. Thanks. All right, so yeah, Apple's a tough call. I mean, it's showing relative price strength, but like many other stocks right now, I'm just not seeing much conviction behind the buying in recent days, and that is potentially problematic. So, like everyone else, I'll be very interested to hear what the company has to say on Tuesday. But I think the Steve Jobs passing away and Tim Cook taking over the reins, I think the company's probably going to be fine execution-wise going forward. The bigger concerns I have are really just the competition. For example, from Amazon's Kindle Fire tablet computer, which it acknowledges it's selling at a loss in hopes of taking a tablet share from Apple. And I think if there's one tablet that probably will be able to take some share from Apple, it will be the Kindle Fire. Amazon's a tough company to bet against. So why don't we take a look at Amazon, since we were just talking about the the Kindle Fire. This is another stock that is, clearly showing relative price strength in this market, but same situation as Apple, just not, seeing much conviction at all behind the buying as it has rallied with the market. It's working on was 7-8 session winning streak. Shares are near its session low now, down about $1.13, 0.5% to 235.68. It hit an intraday high of almost 240. So resistance for Amazon at this point is going to be the $244 price level here. If the NASDAQ gets going, if we see, money start to come back into this market, you can't rule out a breakout in this name either. But, volume matters, and until I start to see, pretty solid signs of institutional buying in many of these NASDAQ 100 names, I think they're just risky up at these price levels. Take a look at Priceline as well, PCLN, another company with just outstanding fundamentals, but it has made a major price move over the past couple of years. Shares of Priceline today up 1.4% to $492.36. I still consider Priceline broken technically. I look at Apple and Amazon to be in much better shape chart-wise than Priceline. The company has not announced an earnings date yet, but earnings expected to be up 75% year over year to $9.31 a share, with sales up 42% to $1.42 billion. And the growth for companies like this, Priceline has a market cap of $24.6 billion, and it's delivering top line growth of 38%, 44%, 42% in recent quarters, just incredible. So fundamentally, it's hard not to like Priceline, but the stock looks vulnerable up here, and I'm going to avoid this one for now. Let's take a look at Thoratech. This is a name that I probably haven't mentioned much, but stock is benefiting from an analyst upgrade today and raised price target. Thoratech is up 6% today to $35.95. Nice little company here. Company has a market cap, I believe, just over $2 billion. Yep. Just over $2 billion, so it's a small cap. Nice breakout today, over $34.85. Thoratech makes ventricular assist devices, basically, which are basically implantable heart pumps. Pretty good track record of growth in recent quarters. Return on equity decent. Has a lot of fundamental metrics I like to see, and frankly, the chart does not look too bad at all here. In fact, out of all the charts that I've been looking at in recent weeks, this appears to be a pretty good bona fide breakout here for Thoratech, again over its intraday high in this area right here of $34.85. Again, shares up just over 6% to $35.95. And so not quite extended in price. I don't think it's too late here. The stock is only about 2 or 3% past that swing point. So good day taking shape for Thoratech. And let's also take a look at Questcor Pharmaceuticals. QCOR on the NASDAQ. I really like the way the stock is trading. Questcor, their key drug is Acthar, that's used as a treatment for multiple sclerosis. Earnings due October 25th, expected to be up 44% year over year to 26 cents a share. Sales up 71% to $53.4 million. Company's had a lot of good news recently on sales trends of this Acthar drug. It's an expensive treatment, but demand still remains strong. What I like about Questcor is that it has rallied nicely, and just look at this tight trading over the past 3 days. It has held on to its gains smartly, and this is another breakout candidate. So there are stocks out there that are acting well, still a little bit unsure of this broad market and which direction it wants to go. But if we start heading higher, you're going to want to look at the strong price performance in the market like Questcor. We'll be right back.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stock placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I watch almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, everyone, as we head into the close here, put the finishing touches on Thursday's session. We have the Dow now down 42.5 points, 0.4% to 11,476. NASDAQ still outperforming, up 13 points, call it 0.5% to 2617, and the S&P 500 down close to 5 points, 0.4% to 1202. A couple of other stocks that I'm interested in, and just kind of watching the price action. I continue to be encouraged by the way that Celgene is trading. I really look at Celgene as one of the Cadillacs in the biotech industry. It's a large cap stock, market cap of $30.4 billion, but I really like the way that this stock has been trading after its gap up on this day. Right here, Celgene is holding above a buying area of 65.86. That would be, intraday high set right in this area here, but it's holding its gains nicely. If you're long the stock, you're probably hoping for more of a bona fide breakout past that buy point. It's only about 1% above that 65.86 level, but it continues to trade well. Seems to be well supported at current prices. Celgene's key drugs are blood cancer drugs Revlimid and Thalamid, and also has a breast cancer drug called Abraxane, but very clean balance sheet at Celgene, another stock that could do well if this market rally keeps going. And also like the look of Visa here. We mentioned MasterCard earlier in the show. Shares of Visa today up 1.5%, outperforming to 92.56. This is a good base setting up here. You can see the start of the base right over in this area here. And again, folks, when I'm talking about charts on my program, you can go right to TFNN.com, tune in Tiger TV on Channel 1, and the show is archived later on Channel 13. But you can see these charts as I'm going through them. But Visa started forming a base back in this area here. Looks intent on retesting that prior high of $94.75. Good clean balance sheet at Visa as well. Earnings expected to rise 18% year over year to $1.25 a share. Sales up 13% to $2.4 billion. Hasn't announced an earnings date yet, but Visa acting well and is a breakout candidate. So the watch list is full. Just going to wait for signs, better signs of accumulation in a lot of these names, but a lot of the stocks that I talked about on the show today have the characteristics I like to see for my Ultimate Growth Stocks model portfolio. And again, if you want to get a 2-week trial to Ultimate Growth Stocks, you can go right on the homepage of TFNN.com. You'll see me right in the carousel there, or you can click on the newsletters tab at the top of the page, click on newsletters, and then click on investment newsletters, and you can get a trial to the newsletter that way as well. So Celgene and Visa. We can also take a look at PetSmart. Have a little more time here. PetSmart had good news for investors today. This is a pet retailer. They raised their third quarter earnings outlook and also its full year outlook, thanks to better than expected same-store sales for the third quarter. It now anticipates same-store sales rising in the range of 5.5% to 6%. After early strength, kind of disappointing action for the stock, though. It gapped up, hit an intraday high of 46.03. Shares were recently trading around 44.88. Still up 1.9%, but all the way down near its session low for the day. So PriceSmart tried to make a breakout over 45.59 today, but looks like it's having a little trouble. I would call this base kind of faulty, a bit choppy, a bit erratic, not a perfect base. Breakout not having much luck today. Don't forget, folks, I'm going to be hosting the Tom O'Brien Show, the first hour of the Tom O'Brien Show, tomorrow on Friday. Tune in just after 4 p.m. Eastern. In the meantime, have a great afternoon, and let's hope for good news from Google after the close. Take care, folks.